A week ago today, I shared with you that we were loading up on small caps right on the black line here, which was the 50-day moving average. So this is IWM, okay? What we could do now is swap over to TNA because we like to use triple the index. We like to use triple the small cap index, TNA. So what we were doing down here on the 19th was loading up right near the lows of that day on TNA, had a big day that day. And yesterday was the follow through. And that's the major discussion, the highlight of this morning. Yesterday was the follow through for small caps. What we've been doing since our conversation a week ago is shifting some capital out of the big cap names just a little bit. We had overexposure to triple the NASDAQ 100, triple the S&P 500. We have, leaps on some of the hateful eight names. So we have a lot of money piled into those names, the leaders. At the start of a bull market, you want a lot of the leadership. Then once you've earned the right to take more risk and you use algorithms to show you when capital is rotating, you can take some of that cream off the top and rotate it into the next alpha opportunity. And what I'm sharing with you now is I think that alpha opportunity is coming into small caps / innovative growth. Okay. In November last year, I shared with you in a meeting just like this, the risk monitor had gone green. It was the strongest signal that we're ever going to get. The same type of signal we had in March of 2020, in March of 2009. I mean, this is the time to put a lot of risk on. We talked about it in November. So we got the initial rip higher. Then we had about a 6-week consolidation. Last week that broke out. So the next leg is started. And when we get a run like that in Q4, it typically spills over into a big Q1. And we talked about that early this year. So, I hate predictions. Okay. I'm the first to tell you that the market makes fools of most of us most of the time. So when I share this expectation with you, not a prediction, this is what I expect to happen based on our algorithms and based on the fact I've been doing this for over 3 decades. You have a big Q4 rally, spills over sometimes into a huge Q1, and you've got to make all your money for the year in Q1, because then the rest of the year is just sometimes giving it all away, other times just fighting, a rotating action, a consolidation action. So we're following the investment strategy of get while the getting's good. Loaded up on triple the indexes, loaded up on double the index, shifting some of that leadership capital into the next tier. It's not that the leadership's going to go down so much as the alpha opportunity can be in the small cap to innovative growth going forward. It's like the leadership's like the cavalry, okay? And they've just ripped a hole in the other army, and now the horde is coming. That's the expectation between now and the end of March. If it doesn't play out that way, that information is just as valuable when it comes to protecting capital as it will be if the expectation plays out in increasing net worth dramatically. Okay. So we know what we're looking for. If we don't see that, we know we have to protect capital. Okay. So that's the macro discussion today.